Kenyan companies and financial institutions have become a major source of foreign direct investments in the East African region as they expand their footprint. Uganda is Kenya's leading importer of manufactured goods at 67 billion shillings as of 2012. Meanwhile, the greatest volume growth was seen in Rwanda at 19% in the same period.
You're increasingly even seeing Kenyan companies becoming more and more sophisticated and asking, yes, I have a manufacturing plant that sits in the industrial area, but if I'm trying to supply Dar es Salaam, Mtwara, and Lindi, where the big oil and gas findings are, can my manufacturing base actually continue being Kenya, or should I open up new regions and new plants across the region? And you're seeing that beginning to happen, where people are optimizing for the kind of the good that they are producing.
As we move towards economic convergence, which is a precursor to the monetary union and so on, it's important that at the practical level that traders, people who transact businesses, find it convenient and easy to be able to carry out their business. So if you're a Tanzanian businessman coming to Kenya, you don't need to carry big amount of cash and so on to transact your business in Kenya. Once you have an integrated regional payment system, then you should be able to write your checks from Tanzania in Kenya with a reasonable clearance time.
Aggressive multi-billion-dollar infrastructure development is occurring across the East African region in preparation for the business boom in connection with newfound resources, including oil and gas. The investments range from power projects to transport and telecommunication.
When you look at infrastructure and the key to making economies grow, you need to deal with transportation logistics, you need to deal with power, you need to deal with movement of resources. And so I believe that the country and countries in the region have really thought about it. But Kenya, you've got the standard gauge rail project, which is going to take a lot of the cargo off the roads, which then will make the roads a lot more effective.
Experts say equally important to infrastructure are the proposed changes to currency conversion that will make it easier to do business in the region.
Traditionally, if you wanted Tanzanian shillings, the conversion rate would go through a euro or through a dollar, which is highly inefficient. But now actually having a payment system that allows free flow of movement of capital and finances, that can only be positive. Now, the big question is, what's the structure of that thing that sits in the middle? And do we make it possible for it to be highly efficient and continue growing? So, for example, is it just payments at a bank-to-bank level, or does it include mobile-to-mobile payments?
If you need to buy something over the border, it is not that easy as just going and say, hey, here's my money. There's lots of things to do in terms of foreign exchange, tools that need to do that. And so it becomes a bit tricky, especially when you find that each economy has its own innovations and splinter groups. When it comes to mobile money, M-Pesa in Nairobi and in Kenya is huge. Then you have Tigo Cash and MTN Money and all these little currencies that are appearing that are actual currencies and that are actual money in people's pockets that need to be spent. So how do you unlock that money for the entire ecosystem, for the entire region?
The tourism sector is expected to be one of the big winners of the East African integration. Already, regional governments have launched a single visa for the trading bloc. Is a key foreign exchange earner, the single visa is expected to boost tourism arrivals in the East African economies.
As one region, we are not competing, we are complementing each other. If you are in Kenya, you have wildlife, you have water, the sand and the beach and so on. If you are in Tanzania, there is adequately differentiated things for you to see. If you're in Uganda, you've got the gorillas, you've got the mountains and so on. So in this region, we can adequately differentiate our products and services to the point where a single visa will allow you can start from Ethiopia. Ethiopia has all historic tourist destinations. Then come to Kenya, then go to Uganda, then go to Tanzania, then go to Rwanda, Burundi. So this will make it convenient for the tourist to get one visa and be able to travel across the region. That way, they spend less time on getting visas and getting permits and more time on enjoying the region.
But despite the strides made to attract investors to the region, which is growing at an average of 5% per annum, the cost of doing business still remains a key challenge.
If you have goods that takes you 3 weeks to get through the Mombasa port, and then it takes you another 2 weeks to ship it to inland, whether it's into Uganda, Rwanda, or even to Kisumu, that's going to be, it costs you too much. It costs 2 times as much to get a container from Mombasa to Kampala as it does to get it from Gachenge to Mombasa, and twice as long. And that's not sustainable in the long run.
If we're not able to reach each other, you know, and we're talking about an integration of the whole region, it's not going to be possible or even workable. If I can't call Tanzania, if I can't call Uganda or some remote place in Uganda, it's not going to work. What integration means is that information can move across borders, money can move across borders, people can move across borders, commodities have to move across borders.
As the next frontier for growth, East Africa has drawn substantial investor interest, irrespective of the risk premium associated with terror attacks, especially in countries such as Kenya. So what do investors consider when scouting for investment opportunities?
What's the economic opportunity? What's the population? What's the potential? And how developed is it from a standpoint of being able to get a return on your investment? And then what's the future from a standpoint of what's the ability for that country, region, or what to grow? So I think all of those figure into your investment decision.